Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look and talk about a company that has been giving dividends for 29 years. Top analysis believe that there is 18% upside on this one, and the 10-year performance of this company is up 407%, and I will show you all these sources. So if you want to check this company out, sit back, enjoy. Do me a favor and hit that subscribe button. As always, please remember that this is not financial advice. This is just me sharing. If you are not yet a subscriber, hopefully by the end of this video, you like what you see and you will subscribe. If you're also into dividend investing and you want to learn about dividend investing, join my community, my ohana of investors. All right, with that said, let's take a look at this company. So the company I'm talking about is Badger Meter. The ticker symbol is BMI. This is a company that manufactures and market flow measurements, quality control, and communication solutions in United States, Europe, and Asia. So they do like utility water solutions, commercial and industrial solutions. You can see from their website. They do like smart water, offering water control, quality control, network as a service, the NAS, and all sorts of these gadgets. So what type of products they do? So if you go check it out, so they do like water control, meter control, flow measurements, electromagnet flow meters. So you can see a different, a different array of components and gadgets for the company. So let's take a quick look at Yahoo Finance. So at Yahoo Finance, the 52-week range, the low is 73, and then the high of 112 at the time of this video is at 92. You can see forward dividend is about 0.90. PE ratio is 42. Now, if you look at performance outlook, it's kind of like a mixture. Now, if we swing to the earnings, you can see only one miss, three beats. If you look at the financials, you can see from 2020 to 2021, an improvement here. So in 2020, revenue is about 425 million. Whereas in 2021, it jumped to 505 million. So pretty good jump. Recommended trends right now is mostly holds, some buying, no strong buy. Recommendation between a buy and a hold. Currently, the average is about 97. You will get, and then currently it's about 92. So if we swing to again Yahoo Finance. What I wanted to look at is the comparison between the S&P 500. You can see BMI is the red, and then the S&P 500 is this one. You can see based on the 5-year chart, it's been beating the S&P 500 pretty good. Now if we swing to Seeking Alpha, what I wanted to look at is the 10-year performance, and looking at this, it is up 407%. Now, if we swing to Simply Safe Dividend, based on a dividend safety score, they're rated as 94, which is very safe. Again, the dividend yield is 0.97. It is a mid cap of 2.72 billion. Now, if we look at the key metrics, the payout ratio is about 37, which is low for most companies. Forward payout ratio is about 38. During the recession, they have increased their dividend. And then if you look at the dividend growth, the last 20 years, 9%, last 5 years, 12%, and then the latest is 13%. What I like, again, I always like to see upward trend, uninterrupted dividend streak of 29 years without a reduction, dividend growth streak of 29 years consecutive increases, and then your payout details would be quarterly in the months of March, June, September, and December. Then you get your payout ratio of 90 cents per share, which breaks down to about 22, 20, 20, and 20. Yeah. Now, if you look at it, dividend yield below the 5-year average. Again, the PE ratio is about 38. Informational tech is 15. And then you can see, looking down to some of the information here, sales growth, total sales a million, return on investment capital, you can see the last 12 months 19%, return on equity, which is 16%. If we swing to NASDAQ, based on their analysis, consensus rated as a buy, which is about 5, and these are the guys, the firms that made that call. Now, if you look at their analysis, you can see a high of 125, an average of 120, and then a low of 95. Swinging now to tip ranks, based on their price target of 109, 18% upside. Consensus is moderate buy. There's only one buy and one hold. And then your high of 125, average of 105, 109, and then the low of 94. Now, if we look at the financials on this one, you can see June 2022, total revenue is right here. Then you got your gross profit, and then your EBITDA, cash and equivalent, total assets, and then your total debt. And then you can see total liabilities, free cash flow, operating cash flow, and so on. And then you can see the chart here, the debt to asset ratio, you can see right there from the 2021. So you can see, and then the revenues right there. Now, if we swing to Webull, based on their analysis, there were 7 of them were rated as a hold, about 57%, a buy of 14%, and a strong buy of 14%. Price target is pretty similar in the high of 125, 97 is the average, and then you got low of 80. There's a thing going on right now. If you open an account and fund a new account, you get 12 stocks. So if you haven't opened one yet, consider checking this out. The link is on the description, and then get your free stock, man. Now let's swing to bar chart based on their price target, similar to a high of 125, target of 99, and then a low of 80, and then pretty similar hold throughout the past 3 months. You can see that it's pretty much a hold on the last couple of months. Yeah, so you got 1 strong sell, 4 strong buy, and 2 holds. Looking at the chart now, you can see it's kind of still like pretty much like the market right now. So you can see right here, you can see let's see over here, the 200 moving average is the black, the 50 moving average is the blue, and then the 20 moving average is the red. So you can see there's a crossover right here. I would consider it's probably going to go down a little bit more, so it's probably going to look for a base somewhere in here. You can see the MACD again crossed over here, so, and then Rizzo, you can see right here, it's about here, it's oversold. So if you're going to consider getting this one, I would say wait for maybe coming down to like 90, even going to 90.14 even, but maybe you might even go farther down, as you can see from the 84, because you can see right here. But we'll see. That's definitely something you can consider. The volume is pretty solid, pretty steady. Now, if we swing to Stock Rover, based on their consensus, it's also a hold. Now, if we swing to, where's that? And now, if we swing to right here, risk and return, you can see based on the comparison between the industry and the S&P 500, you can see the 3-year return is about 74%, and then the 5-year return is 105. So that's something to kind of just have an idea. Now, swinging to simply Wall Street, based on share price and fair value, currently is at 92, fair value is 82, 12% overvalued. Some of the key things about this company: earnings are forecast to grow 8% per year. Earnings have grown 16% per year over the last 5 years, and then no risk detected for BMI from our risk checks. So all right, man, that's pretty much it. I think it's a pretty solid stock. So if you're looking for another company to invest on, definitely check this out and see if this is something that you would consider investing on. For me, it's a solid one, but I'm not looking for something new at this point. I think with the market being so unpredictable, that I'm leaning towards the more fundamental, stronger companies. But it is a solid stock in my opinion. All right. Thank you so much for watching, guys. Hope you liked this video. Do me a favor and hit that like button. Please be safe out there. Stay cool. Keep investing. And I'll catch you guys in the next video, all right? Take care. Aloha.